I think so much of life is determining what things mean to you. I think that a lot of that's up for debate. Something bad happens to you, you determine what that means to you. And so I just determined that $100,000 loss meant to me that, hey, I'm really fortunate. I'm swimming in the deep end with the big boys. And that was a dream of mine forever. And guess what? I'm swimming with the big boys. Kid that had nothing growing up, built this thing from scratch. So I'm going to wear that as a badge of honor, losing 100 grand, right? Because that's more than I made in a lot of my jobs for a lot of my life, right? In a year.
Welcome to the Ask Me How I Know show. I'm your host, Julie Holly, and I'm so excited you're here. Ask Me How I Know is the only podcast in the multifamily niche replicating what takes place outside the walls of a seminar. Remember when we used to get together like that? This is like the lobby where honest, unscripted conversations take place and transformation happens. We'll talk about practical problem solving in the multifamily niche as well as overcoming mental roadblocks. This episode is brought to you by 3 Keys Investments. 3 Keys Investments is dedicated to helping people like you, you, enter the multifamily investment space to build passive income and legacy wealth. If you haven't already subscribed and reviewed Ask Me How I Know, I'd be honored if you did. Thanks so much for joining me today, and now for our featured guest.
Did you get a bio or anything, or are you just flying blind?
No, I've looked you up. I know, but yeah, he didn't send a bio. But here's the thing: I don't usually read off. I'm not the podcaster that reads off the bio.
Yeah, I hate that.
Yeah. I find it really incredibly awkward to be the reader, and then to be on the waiting side. I'm like, oh, this feels really awkward. So
especially when it's a really flowery, and I've done that where I try to tell my podcast guests 2 or 3 sentences. I'll intro you. But sometimes we get or sometimes when I've been a guest, there's, they read the long form bio and it's just, it's so hard to sit there and listen to it. So
it's kind of the equivalent of a Ben Stiller movie where it's just awkward. You're like, oh gosh, can this please stop now?
It's so awkward. Yeah. Especially one-on-one. Oh my gosh. But so, my company is DJ E-Text Management Group. I'm the founder. We do multifamily in San Antonio.
And I'm going to let you know right now that my son just told me last night he wants to move to Texas. And
cool.
I said, really, that's super cool. Go where you need to go in life, buddy. But what's the drive,
Yeah.
He said, yeah, because I like everybody's accents down there.
Really? Okay. So, where are you guys based?
Oh, we lived in we grew up in California, Denver, and we're in North Idaho now on the Canadian border.
Okay.
So we were just in Huntsville, visiting our market and looking at assets and everything.
Yeah.
And he said, buddy, it's kind of like going to, Alabama and Nashville. Remember we thought we'd hear all these great accents, right? You thought, and then you realize it's actually a melting pot. I said, Texas is growing by leaps and bounds. It's this huge melting pot. You've got a lot of international people even. So I'm like, I didn't want to burst his bubble, but I'm like, if that's the reason, just know not everybody talks like that.
That's too funny.
It's super cute. Awesome. Okay, well, let's go ahead. Let's jump in. This is going to be super fun. Hey guys, welcome back to Ask Me How I Know. I am so glad that you were here for another exciting episode. And this is going to be a little more exciting than usual because we're flying blind like never before. And I'm so excited to do this. Devin, welcome to Ask Me How I Know.
Hey, thanks for having me on.
Devin, I'm really excited. We've had a great conversation to start with. And so I know that my audience is just going to gain so much value. Can you go ahead and just tell a little bit about what you do down in the heart of Texas? But you got to talk. I can't even get the right accent.
If I try to fake a Texas accent, I grew up in San Antonio. I don't think I have an accent. Maybe you and your listeners disagree. If I tried to fake one, it would be atrocious and you'd probably edit it out. I was born and raised in San Antonio. I got into real estate almost a decade ago. And I had always from the very beginning wanted to go big, go to these big, $20 million apartment buildings. It took me a lot of years to figure it out and get there, but I had some guidance and mentorship very early on that set me on that track. And so now we own lots of, you drive around San Antonio, you may drive by one of our apartment communities. So we're vertically integrated. We have the management company. We've got a small corporate staff kind of on our private equity side. And that's what we do. That's our day job, is to run these apartments. And ultimately, we're able to do this because we syndicate, we partner with investors, because I'm not going out and writing, $20 million building, you might need $6 million of equity. I'm not writing the $6 million equity check. I'll put money in, but we're also getting investors. So we kind of live and breathe for our investors, and we reverse engineer from there. This is what we need to do for our investors. What projects can we uncover that are going to meet and exceed that?
That is awesome. I have a lot of passive investors that listen to my show, and some of them might not be familiar with the concept of a larger enterprise like yours, where it's vertically integrated, right? And so maybe if you can give them an explanation of what that would.
Sure. Yeah. In this business, it basically means that you own the management company. So for years, we had used third-party management companies, and the types of properties we're buying, just to kind of give everybody context, is usually 100 to 300 unit communities. So these are on 5 to 10 acres, and they're built usually in the 80s. And with a property like that, you're probably paying, the property's always paying a management company, usually 3, maybe 4% of revenue to run it. And that's HR, staffing, marketing, everything on site, the accounting, et cetera. So what we found, like many operators, is that, we were hiring these big third-party management companies. We're paying them that 3%, 4%. And because we were one of many clients, the results were just suboptimal. You hear that story over and over again. So we said, look, we've got a big enough portfolio. We're paying out this money, whether it's third-party or in-house. And we think we can do a much better job in-house. So I created a management company, hired just a rock star to run that. And it's been awesome. We just have more control. And this is all in the name of improving net operating income at the asset level. Again, we start with the investor outcome and reverse engineer the entire company to facilitate that. So that's what vertically integrated means, that we just have the management company in-house rather than it be some third party that maybe doesn't have aligned interests with us.
And I love it when, an operator is large enough to have that, that vertical integration. It protects the investors on a whole nother level. And it makes a lot of sense for efficiency purposes. Out of curiosity, because one thing I love about my podcast is that I end up asking all the questions that if I were listening, I would want to hear. And that is there any plan of adding a construction element or, some type of repair to kind of complement and continue that vertical integration so that you don't have to hire the handyman all the time? Or
yeah, are you reading our emails? Are you on our internal emails? That's a timely question.
I'm not, but that's like, I'm like, that's the next level. And where are you guys at with that?
No, we are we're planning some really cool stuff right now. And we're kind of in discussions on this. It's not baked, but we're looking at our landscaping expense across our whole portfolio. We think there may be an opportunity here to spin up a new company.
That's a huge element right there.
Yep. And that could be so it's interesting with our property management company, we've purposely decided no third-party clients. We just want to focus on our stuff. And you made a good point earlier about scale. We've got some overhead on that property management company that doesn't really work on 1 or 2 properties.
No.
So we had to get to a point where we had enough of an asset base to support the overhead for the management company. And then once you get there, it gets pretty exciting because then you can kind of grow it. And so the landscaping company is kind of on the radar. And then we are experimenting with some different ways to structure our maintenance staff for better results and lower costs. And won't go into a ton of detail on that, but that's something that's in the pipeline that we're really excited about doing to just drive efficiency. Now, I am a serial entrepreneur. I literally have to tell myself, no new LLCs. Stop it. I just love starting stuff, right? I love it. I'm the first guy over the hill with the charging that, in the battle.
Yeah.
And my team, fortunately, can support me on that. But I'm a starter. And so I kind of have to dial it in sometimes. And I really want to sit with an idea for a long time. And we've been talking about this landscaping company idea for a while. So I think that's probably in the works. And then how far do you take that? I've got friends that have started insurance companies, that have started title companies. It's like,
Yep.
I don't know if we want to go that far, but I do like starting companies. And so, I wouldn't be surprised if over the next year or so and beyond, we have some additional stuff come up. And look, at the end of the day, it's all about, can we improve the investor experience and performance?
Yep.
And if we can, great. If it's a distraction or a shiny object, like when we started the management company, I thought, hey, listen, we could just bolt on some clients. We could do a good job for them. We could grow this company. But then I realized like the attention that would take away from our team. And I said, nah, the revenue's not worth it. Let's focus on our stuff. It's almost easier for us to go buy another $20 million building and just grow the management company that way than it is to like take on third-party clients and create more stress for our team. It's all about the investor return, and anything that's going to streamline and improve that drives our decision making.
Well, and that is what matters and that's what I love hearing. My computer wants to restart. I don't think that's the greatest idea at the moment.
Oh, no.
So, I mean, like that's the key. And I love hearing that from, the guests on my show. And it's interesting because the show draws, I think it just kind of attracts people with that mindset of what is best for my investor. Like, oh, sure, it would be fun to go and start this new company. It would be fun to expand out this way. But at the end of the day, what are my returns looking like? Is that really going to help out my investor? And that's the heart behind a powerful operator right there. I mean, that's where I believe the success comes from.
100%. It's like that old quote about you can have anything you want if you help enough other people get what they want. And
Yep.
so that's been my philosophy since the very first dollar of capital that I raised is let's just knock it out of the park for this person, give me their capital. And, everything else kind of noise after that, and if you do that, boy, the rest of it really grows. Right. And so that's the approach. And I think this is like a long-term vision for this business. I mean, some of these properties we say, hey, we're going to be in this thing 5 years. This is not a flip. This is not an overnight deal. We're going to have these relationships for many, many years, for sure.
And those relationships so often continue for many years beyond that single. Usually it's like, okay, you enjoyed your investor experience so much, and here's the next opportunity, and they're bringing other people along with them so often.
That's right. Yeah, that's right. Yeah.
Yes. So as we're looking at that investor experience, I'm wondering, 10 years ago, the market was in a really different spot.
Yeah.
And I'm wondering if you will, it was in a really sweet spot too. It was that transfer of wealth time. What do you see going forward? Are you on the bandwagon of transfer of wealth is coming once again?
Yeah, so I always kind of put a caveat on any forward-looking statements, right? And I think when people are too sure of their future predictions, that makes me skeptical. Nobody saw COVID coming this year in 2020, right?
Seriously.
And we knew that was going to happen. We knew it was going to be. We didn't see 9/11 coming. We didn't see the tech bubble coming. We didn't see 2008 coming, even though there were a lot of indicators. We didn't see COVID coming. We always didn't see it coming. So I don't want anybody to rely too strongly on my forecast. But what I see, and I tend not to try to look too far out, but what I see for 2021 is an extremely low interest rate environment driving deal flow. Everybody wants to do deals, right? Brokers, sellers, buyers. Everybody wants to transact. That keeps the whole thing going. And with money as cheap as it is right now, it's amazing. I looked at some of the rates we got a few years ago on projects that I was happy to get. And then I'm looking at today's rates going, wow. So we have headwinds in terms of, this COVID debacle and everything, but we've also got tailwinds, and there's always both. It's never going to be all tailwinds and we're just sailing through. I don't think it's going to be. Maybe some people have had a different experience. I haven't. So the tailwind, I think, is the cost of money. It's so cheap to borrow money and lock it in for long term. And then population growth. And in certain markets, and in the market we're in, we're seeing a lot of population growth, and we're buying stuff below replacement cost. You can't recreate what we own for that cost basis anymore. and it's just kind of simple supply and demand. Another thing that I like is locking in these large non-recourse loans in today's purchasing power, because all this fiscal stimulus and money printing is going to have an effect on asset prices. I think asset prices are going to continue to go up. And if we can lock in 75% of the capital stack in 2020 dollars, that purchasing power in 5 years is going to be sadly eroded. So we're going to see asset prices go up, and the banks are going to be stuck with with that loan. So that has kind of been my thesis on multifamily in general. And I think that continues. We'll have some headwinds, I'm sure, next year, but I think, it's the cheap debt that's facilitating ongoing transactions. Because if you're talking to getting a property at 2.75% interest versus 5%, it's one deal works, one deal doesn't, same exact asset.
That's so interesting. And I remember as a young child, I think I was maybe 12 years old. So I guess I was a tween at that point. But I was looking at my dad. He was a residential realtor. He had an amortization schedule, and he was so old school. And so I was sitting in his office one day looking at that and looking at the different interest rates and how it affected the purchasing power. And I was asking him questions. I was not a normal 12-year-old, I think. And I mean, I could see for myself at that age what a difference it made, just on the single family side. And then you put that onto multifamily when we're talking about millions. It's a significant difference.
It's incredible. Yeah. Yeah. So there's, the reasons we all like real estate, the ability to leverage, the depreciation, the appreciation over time. In multifamily, the ability to force NOI higher through some different activities. I mean, all that stuff hasn't changed. And I think we just want to continue to own stuff in our backyard and buy deals one at a time that make sense.
You're in such a great place to accomplish that. If you don't mind, I'd like to turn the conversation a little bit and ask you about COVID and what it's been like for you and your company throughout this year, how you've responded to it, and your continued response.
Yeah, great question. I'll tell a little story about when I got COVID. I was at a neighbor's house, and he wanted me to smell something barbecue related. And I went up and I just took a deep inhalation, and I said, "Oh, I have COVID." I didn't get anything. I didn't smell anything. So that was, I had it, got over it. And, that was my experience with it personally, was thankfully pretty non-impactful when it first happened. But, that's just a funny little story. There's definitely some stuff, that I can dive into here. The most probably impactful is, and I like to be transparent about this, because we tell everybody, hey, we've never lost investor capital. We've never even missed our pro forma targets. We've always beat our pro forma targets, right? And that's like, wow, okay, that's a pretty rosy picture. And that's the truth. But this year in 2020, I had a $20 million deal under contract, 20 million plus. In March, it was a non-stabilized deal, meaning occupancy was lower than 90%. We weren't going to get agency financing. But I really like the area. I really like the story of the asset. I knew we could make this thing work for investors. We'd done similar things. So I put it under contract, $250,000 earnest money, 100 of it hard day one, which is—
I was going to ask you if that was hard. Oh.
So the next week, the world fell apart. Every lender pulled out. There was no lender that was going to finance it. And I was about to go from 100K earnest money to 250K, $250,000 loss, right? So I said, I'm out. Keep your $100,000 and refund the rest of it. We don't know what's going to happen. In March of 2020, we didn't know if it was Armageddon. We didn't know if it was going to be a 9/11 type impact. We didn't know what, and we still don't. Right? We're talking now that in Q4 2020, but hopefully we're getting back to work, returning to normalization. I don't know if the other shoe's going to drop. So that certainly impacted me. Right, $100,000 loss, very painful. But we had already had investor funds, coming in. We said, "Listen, guys, I'm not thrilled about this, especially because I just lost $100,000, but here's your money back. We're going to live to fight another day." And so that was probably the biggest kind of financial impact. That was the biggest loss I've ever incurred in my life. Right. Fortunately, the companies and everything are in a position that that was not, a devastating thing. Right. Even though it It was not great. I look at that personally as I think so much of life is determining what things mean to you. I think that a lot of that's up for debate. Something bad happens to you, you determine what that means to you. And so I just determined that that $100,000 loss meant to me that, hey, I'm really fortunate. I'm swimming in the deep end with the big boys. And that was a dream of mine forever. And guess what? I'm swimming with the big boys, kid that had nothing growing up, built this thing from scratch. So I'm going to wear that as a badge of honor, losing 100 grand, right? Because that's more than I made in a lot of my jobs for a lot of my life, right? In a year.
Right.
So I look at it as a badge of honor. I'm playing within the big leagues now. And sometimes that's what happens. So that was impactful. Then you look at kind of the operations. So when in March, we said, hey, obviously no acquisition activity, stop all that. I had to change some stuff in-house. I had to, reduce the team a little bit. I had to let go of some vendors. Everything was, how do we cut costs and let's just be ruthless. So we completely kind of restructured some things in order to cut costs and maintain our cash positions, both with the company and at the individual assets. Then on the investor relations side, we said, hey, instead of a monthly update that we're going to push out, we're going to put in updates as often as necessary, sometimes a couple of times a week on occupancy, collections, et cetera, because we didn't know what was going to happen. We didn't know if properties were going to go to 50% occupancy. You just didn't know. So we got extremely proactive on the investor communication side. We stopped any acquisition activity. We reorganized the company to cut costs. And then we were just very proactive. The teams on site were very proactive in terms of taking care of residents and just kind of dealing with it day by day. Now, in retrospect, we basically saw no impact at the property level. Some properties are performing slightly worse than they were. Some properties performing slightly better. Some properties performing quite a bit better. There's been some relief packages. Bear County, which is where all our properties are, released $30 million for rent assistance. So we've seen a few of those checks come through. But in general, as we look back at 2020, not a huge impact on occupancy collections. Certainly there have been a few stories where folks have been impacted, but overall, I mean, multifamilies and what from talking to other operators have been extremely resilient, and in our portfolio has been extremely resilient too. So that's kind of our COVID story. Lost some money on a big deal, stopped acquisitions for a while, reconfigured the company to cut costs, and got extremely proactive with investor communications and on site with the residents. And so I think we're coming out of it now. We've acquired 2 properties post COVID. So, we're kind of back on the horse. Investor appetite seems strong, and we can hope for the best moving forward and enjoy the kind of interest rates we're looking at right now. It's incredible.
Gosh, the interest rates are so amazing.
Yeah.
I love what you're doing. Curious question. I know a lot of people will be wondering, who have a little more savvy in them, who are listening, is class. Are most of your B class, A class, C class? I mean, I'm kind of thinking you must be in the B class area, with most of your portfolio, but I don't want to make any assumptions.
Yeah, so mostly B with some C class stuff. We're okay with some older stuff if the area town's right. I've done some B class stuff, and
I like the smile on your face. Is that I learned? Like what?
Oh my
Tell
God.
the story. Come on.
So many stories. When your wife has to call you and say, listen, I see that there's a chopper over your property's on the news and there's a shooting. Are you on site right now? You go, I don't know if this is what I want to do again.
Yeah.
We had some cops raid a property in San Antonio, raid one of our units. And they said there were more guns in an 800 square foot apartment than they'd ever seen